Good morning. It's Market Day Report. Welcome to almost the weekend, our final trading day of the week. How about we jump in, see how the markets are trading in overnight trade. We'll start with corn. It's been lower, down 4 1/4 on the September at 370 3/4. New crop December 392 1/4, off 4 3/4 cents. And I think one of the questions we'll have in that trading range for corn, 392 up to 397 1/2, can we move above $4 today and maybe not settle, but just find $4? What about soybeans? We're probably not going to find the $10 range. The way we traded overnight, September off 8, 943 1/2. November 8 lower, at 960 1/2. And then looking at wheat, lower as well. Chicago, September off 3 1/2, 524 3/4. July 583, down 2 3/4 cents. Hard red winter wheat, down 2 3/4 on the front month, 534 1/4. And July 575, down 2 3/4 cents. Spring wheat, Minneapolis, up almost the same trend. September down a penny 3/4 at 584 1/2, unchanged on December. March one tick higher on the March. And finally over in New York, cotton futures down 39, 66.76. Brian Hoops, Midwest Market Solutions, joins us to start the morning off. And Brian, there's just not a whole lot of news right now when we're looking at grains, because we probably traded that export sales number.
Yeah, we certainly did, Tony. Good morning. It's pretty quiet as far as any fresh news goes for the grain markets. We've tried to have a little technical bounce after the supply and demand report. That probably failed yesterday. We saw corn hit big resistance at 403, was turned back, and now we're trading about a dime or 11 cents off of that high. The wheat markets are lower, as you mentioned. Kansas City yesterday had fallen to technical support, and the lowest close of its contract, it's below that support this morning. So likely to find additional follow-through selling. The weather is very good. There's just not much else to talk about in the grains. We've gone 3 days now without any private export sale announcements to give us any type of a support. The export sales that were out yesterday, pretty much old news at this point, even though they were decent. We're still far behind our normal sales pace for soybeans. We're just kind of in a catch-up mode right now. And with the weather looking good through the end of the month of August, it's going to be very difficult to sustain any rallies. You will have some short covering technical bounces like we saw the last couple of days, but to sustain those trends and push the markets higher, it's going to be a really uphill battle to do that.
Well, let's talk crude for a moment. West Texas Intermediate working towards its second consecutive 2-week gains, but we're off right now. September at 76.40. Down 171. We really have mixed news when it comes to crude oil. I mean, stocks, and then looking at demand. Is this at all on your radar?
Yeah, we're not getting much support out of the crude oil market today. It had rallied yesterday. In fact, it had been rallying most of this week. We had the inventory report on Wednesday that showed a buildup of stocks rather than a drawdown like the trade had expected. So that was the first time in 5 or 6 weeks that we saw that buildup, and a disappointment to the trade, no doubt. I thought yesterday's action was real corrective in nature, where we had rallied off of some support areas, and now we're starting to see more pressure going into the weekend, and the contracts roll from September to October. September goes off the board on Tuesday. So we're getting a lot of that roll pressure. And once we get through that, the markets have a tendency to rally on some fresh buying, but we have to get through that first. And it looks like going into the weekend, we're going to see pressure against that crude oil market and probably into Monday as well.
And I imagine eyes will also be on Jackson Hole next week as we talk about Fed and the potential for a rate cut. How about we take a break, come back, we'll dig into the proteins. We'll talk cattle and hogs with Brian Hoops as Market Day Report continues in a moment. Welcome back to Market Day Report. As we get things rolling for you on a Friday morning, let's go to the markets. And we don't trade in overnight trade, the livestock, but yesterday live cattle 55 lower on the August at 184.05. October, the most active at 180.75, down $1.37. We haven't really had cash cattle develop at this point. Some light trade in the north at lower prices, but still waiting to see what will happen, especially in the south. August feeders, 246.72, down $1.17. 67 lower on September at 243.67. And let's swing over and pick up hogs as well. Higher with October up 57 at 76.50. We bring back in Brian Hoops, Midwest Market Solutions. And Brian, I jotted a couple of notes down from the pork cutout, up 430 to 103.61. The butts leading us higher, gaining, I think, a little over $5. How does that work into the equation?
Well, the hog market, Tony, usually trades from a real technical standpoint. So maybe they ignore this fundamental news, but it is very positive news. We saw weights come down Wednesday morning when we talked. Now we have a big jump in the cutouts, and they've been stronger through most of this week, led by some of the bellies and the butt products that you were talking about. That should be a sign of strengthening demand and should lead to higher prices in here. So I think you're going to see the hog market try and sustain some gains. It's been a very choppy affair, and no doubt it will continue to be. But if we can see some technical strength, taking out the previous day's highs, taking out the previous week's highs, that sort of thing, we should be able to build on some of that momentum. The cattle market's probably headed the other way. We saw prices rally this week into retracement type levels, 50% retracement on the October charts. This felt like it was a retracement rally. The news has improved when we were at lower prices. We saw better export demand. We saw better consumer demand, retail demand here in the United States. But we also saw a lot lower cash trade developing yesterday. $7 lower on a dress basis, falling below $300, down to $298 Nebraska yesterday. And that's what pulled the futures market off of its highs. That's something that the cattle market has to try and overcome, is this cash weakness and hedging pressure on rallies that we saw if we're going to sustain any type of strength. And I think it's going to be real hard to do that at this point in time.
Well, good points. Great way to start your weekend. I know you're headed out right now to the golf course, so Brian, thanks for showing up this morning to visit. I'm kidding about the golf course. President, Midwest Market Solutions. And that's how we're going to start our trade here on Friday.